Greetings. Welcome to In Conversation with Trevor, brought to you by Heart and Soul Broadcasting Services. I go beyond the headlines and beyond the sensational. Today I'm in conversation with Collen Tapfumaneyi, the founder and CEO of the Escrow Group. If you enjoy this conversation, remember to subscribe, to like, and to share. Let's get down to some work.
Investment is just not an elitist thing. It's necessary because we are looking at investing for your future when you retire. We are not prepared to give each other a chance. The model for our capital markets is incorrect.
Collen Tapfumaneyi, welcome to In Conversation with Trevor.
Thank you very much, Trevor. I'm really honored to be here.
I'm excited to be chatting to you. I know you've been flying all over the world, all over the continent, making lots of money and doing a lot of exciting things. But before we do that, Collen, allow me to turn over to share with our viewers. First of all, we're doing this episode with our colleague, friend, and brother, Blessed Mhlanga, in police detention for simply doing his work. So he's in our minds, he's in our prayers. We are angry, we are upset, because journalism is not a crime. Blessed has not committed a crime. And we're praying and hoping that good sense and reason happens and he gets released. I think he's spending 14 days in prison, appearing before a magistrate on the 14th. If a high court appeal does not succeed. Yeah, not easy. We're thinking of you, Dara. On an exciting note, we are sitting on 10.7 million views on YouTube, 83.1 thousand subscribers on YouTube again. We are sitting on 8.7 million views on Instagram, 4.5 million views on TikTok. Please subscribe, like, and share. And do press that notification button so that you get a notification anytime we have one of these quality conversations. Collen, we have to start with some heavy lifting. Your space, finance, and technology are colliding in a big way. Talk to us about how technology is disrupting the space that you are in the first instance, and secondly, how you're dealing with that disruption.
Well, this disruption is necessary. I think technology comes in as an enabler for more efficient markets. I think the markets having been fairly developed, I think there has been a challenge regarding the inclusivity of our markets, accessibility of our markets, convenience, and all that. So you'd realize that, especially where I really play in a lot, which is the stock market, capital markets, in terms of inclusivity, you're looking at 1% included out of the entire population.
99% out there.
Outside. So because of that problem, and innovation comes out of a challenge, there being a challenge, and therefore you've got to innovate and come up with a solution. So technology then addresses most of the reasons why 99% are excluded. Security, convenience, efficiency, costs, all those things are factors that keep 99% out. So the collision is necessary. It is deliberate, and this is where we find I would call it convergence between the finance and technology. Basically, it just means that someone who is heading cattle in Bikita, if they want to buy $5 worth of shares, they must be able to do that without.
Can they do that now?
Yes,
they can do that.
They can do
Talk
that.
to me about that. How you've been able to enable that?
So basically, again, we bring in the technology, that is the automation, and then we looked at it and said, what are the barriers that stop everybody from having equal access to the market? And we realized accessibility, because previously you have to look for a stockbroker and you sit with the broker and go through the process. And the process for you to successfully start buying shares included having a relationship with your broker, with your bank, custodian bank, having a depository account, having your records at the transfer secretary. There were 4 or 5 entities that you'll have to, that will have to know you, which means you have to fulfill all of those their requirements that are varying. Some want 10 forms, some would want ID and all that. So you can imagine what it would take for you to actually have an account so that you start investing. So with that, we just said, now we have technology, telecommunications technology.
How have you simplified it? What have you done?
Basically putting together an application that is accessible on the everyday gadgets that people use. So everybody has...
What is the application called?
It's called C-Trade.
C-Trade, okay.
Yes, C-Trade. So we developed C-Trade in such a manner that it takes advantage of the mobile penetration that we have. So almost everybody has a mobile phone, has a mobile number, and mobile money account. And we built a technology that would be accessed through USSD, just a short code, and you are in, you register, and it's a mobile. There is a mobile app version, and there is an internet or online version. So basically, for those with feature phones, without data, without network access, and all that, they are catered for. So wherever you are, as long as you have network access and you have a mobile wallet account, just dial a short code, go through the process, register, and boom, you're able to buy shares.
Are you seeing an uptick in your business as a result of this technological enablement with the USSD facility?
Yes, the uptake has been steady. I think access and convenience is one thing. Then financial literacy is another big thing. In our 5-6 years, we've been able to register more than 30,000 citizens who have onboarded. Now, registration is one thing. Now, you need transacting is the other thing. We have been having quite some good traction. So, for example, on a good day, the platform contributes in terms of number of transactions. It contributes in excess of 70% of the transaction activity.
Wow.
The values are small, which is not a big issue for us now.
Start.
Yes. So what we have done is to allow somebody to buy, like I said, $5 worth of shares, $2 worth of shares, and if they can find the shares. So now comes the question now as to supply of those small numbers of shares, the understanding by our people in terms of the mechanics of trading, and there's still a lot of work to do. But having 30,000 to start with is a good start. Obviously, it needs a collective effort from everybody to ensure that the message goes to the targeted audience.
What's that collective effort? What does that collective effort look like?
So it means, because it's an ecosystem that we are dealing with. So what we did, just to take a step back, what we did was to say, within that app, when you register on C-Trade, you are able to register an account with a stockbroker, with a custodian bank, with the depository, that is the central depository, with the transfer secretary, everybody in the value chain instantly. So just going through that. If you are on EcoCash, we use EcoCash, KYC data and all that. So it's an instant thing. But because it's an ecosystem, you then need the same players in the ecosystem to come together. So banks would have thousands of customers that would also be interested in trading, so they need to contribute, stockbrokers, stock exchanges, and all that. So once we have that collective effort, you are then raising awareness in our various spaces, because we now have a tool, a facility that everybody can utilize. Our regulator, because we are in a regulated space, our regulator, Securities and Exchange Commission, they are doing their part, raising awareness and all that. But we need to go further. We need schools to be talking about it. We need parents to be talking about it. We need this to be talked about in churches. Why do I say that? I say that because investment is just not an elitist thing. It's necessary because we are looking at investing for your future when you retire. What happens when you get to 60, 70 and you can no longer work? Our pension systems have not really worked very well. Mm-hmm. So what we need to encourage is people to have savings. Mm-hmm. So our economy has become, partly informal. So that informal sector, you wonder, what the situation will be like, 15, 20, 30 years from now. This is where we are saying, if we put all our efforts, come together and ensure we, bring in a culture of saving. Before we even talk about investing, a culture of saving. Every dollar you earn, if you put aside a few cents, you're actually
10%.
doing some. 10% is a magical number. Yeah. I'll tell you a story about the 10%.
Yeah,
right. I go ahead with the story?
Yeah, absolutely.
Yeah. So when I was, when I got involved in the stock market and interacting with investors and all that, there's one gentleman that,
What's his name? Do you want to share?
Yes.
We share names here for purposes of inspiration and recognizing people, yeah? Mm-hmm.
He's late. Okay. You would know the name, Roy Tenner.
Oh, yes.
So he was a prolific investor. And Roy Tenner was very diligent in his affairs. Every time a dividend was declared, if you forgot, because we were transfer secretaries, we were the ones who would process dividends and all that, Roy Tenner was our alarm to know, hey, there's an AGM that you need to organize. There's a dividend. That's because he kept records. So we had very good rapport with him because he would go around, chasing after his dividends, chasing after his shares and all that. So you would know, 10, 15, 20 times a year, you are likely to meet Roy Tenner. So obviously you start communicating, conversing and all that. So we wondered because when you looked at his portfolio, it was quite massive. In some big companies, he was even in the top 10 shareholders. So, very wealthy. So we were just curious to know, how he did it. How come, what made him have such substantial investments? So he just said, right from when he was, I think, 17, 18, he was just putting aside every time he got some income, a percent, yeah. And by the time he retired, the value of his wealth was enormous. So he's one example where you say saving, investing, especially in capital markets, work. Because just as an example, he had, Delta shares, for example, from the 80s. Delta was then split into various companies that got listed. So you got, African Sun out of that. You had got OK, you got Bell Arms, you got Dawn Properties, you got all that. All that on top of dividends were coming out of his original investments in Delta. And the same can be said of so many companies. So investing in shares, yes, the risk is higher, but eventually with a diversified portfolio.
Patient investor.
Yes. So based on that, yes, traditionally with formal employment and all that, your pension fund would take care of that.
I want us to go to help us. I thought we would start on the by the heavy lifting, which I think was a great thing that we did. But I now want us to help us unpack the Escrow Group. What is the Escrow Group? I know you've got financial securities and so. Just talk to us. Let's take a helicopter view of the Escrow Group as quickly as we can.
Yeah. So it's a diversified group in the finance and technology, space. So we have COPSEV registry. So it specializes in management of registers of listed companies. Then we have an alternative trading platform, which is licensed as a securities exchange, but a lower tier exchange, which is called Financial Securities Exchange. Under Financial Securities Exchange, we have ZMX, Zimbabwe Mercantile Exchange, which is the country's commodity exchange. And then we have Escrow FinTech, which is our technology entity. So that's what makes up Escrow Group.
And you are the founder and CEO.
Yes.
Talk to us now about the thinking behind creating this diversified financial entity that you've created? Was it deliberate? Talk to us about that.
Well,
or maybe before we do that, I can see a signal. I'm being told that we need to take a break. We're going to take a break. So I think that's a beautiful place to take a break. So when we come back, there's young people sitting there and saying, wow, this guy has built this big group, Financial Securities Exchange Ecosystems, COPSEV Registrar. He's in Kenya, he's in Rwanda. How did he do it? I want us to go to that place. How did you do this? And can the young people watching there replicate the magic that you have shown us? So at home, don't go away. See you on the other side.
Even an ordinary looking person from a rural area, if they get a chance, they might deliver.
Welcome to our conversation with Collen Tapfumaneyi. Just reminding you to press that subscribe button, and still boasting about the 10.7 million views that we've got on YouTube, 83,000 subscribers on YouTube, 8.7 million views on Instagram, 4.5 million views on TikTok. Join this growing club by subscribing on all those platforms that are growing. So, Collen, how did you do this? What was the thinking? Take us to that place where your last job, you're thinking, I want to do this. Take us there.
So that was when I was 25. I was working in a bank.
Which bank was that?
The former, it's now Bank ABC, but it was First Merchant Bank then. Yeah. So under their investment banking, there was the shares management registry services. So that's where I was working. And then an opportunity just arose, because at that time, the registry or transfer section.
How long had you been working with First Capital?
I think about 3 years.
3 years.
Yes, okay. Yeah. The registry services, the transfer secretary services, were being offered by banks just as a value-added service to their top clients that were listed. So it wasn't like core to the bank's activities. We just felt that it probably could be done better with someone doing it on a dedicated sort of basis. So one of our clients, that we're providing a service to, kind of encouraged me when we were talking, and I was saying, I think I would desire to run a business of this nature. And then they just encouraged me and said, if you set up, we would give you business. So out of inexperience and all that, I got convinced and agreed to partner with this former client. And we set up the business, COPSEV Transfer Secretaries. I resigned and went to set up that business. But unfortunately, his board did not approve the
I'm
movement.
Listening intently to this story, I think. Yeah.
So, it was a real bad stuff.
Let's talk about that. So what then happened?
Well, this promoter of mine, then because he had encouraged me, he then pledged to assist me if I could hang on and push on and try to make sense out of the business. So, took a couple of months going up and down, going to companies, trying to convince them. I think we benefited from naivety, because I didn't quite appreciate and understand the need for a robust business plan, a risk plan, and all those. If I had done all those things, I don't think I would have made the move. So it was an instinctive move, and I believed I had what it took to provide the service. So eventually, one or two companies agreed. And remember, you're trying to offer a service that is currently being offered by banks.
Big players.
That is being associated with banks. So it was quite a hard sell. But eventually we had the breakthrough. The first client came on board and the second came. But after the appointments and before we started providing the service. So you've got your appointment letters from 2 clients and you have a roadmap to say on such and such a date we'll start providing the service. Then the Econet listing story came up. So again, I went and presented myself to the advisors, to Econet, and said, I'm ready. I think I can do this job. Miraculous.
What was that job that you wanted to do for Econet?
To be their transfer secretary for their IPO, their big IPO. So I made a very strong pitch with their advisors, and the main advisor then was Patterson Timber, working for NMB, and they were the main advisors. So I went and I said, I think I have what it takes to do it, and this is my plan. And they said, they went to Econet and they looked at it and said, we want people to believe us, believe our story as a startup and all that. Why don't we also support
another startup?
So we got that job. And so by that time we had a couple of clients. So our first challenge was to actually manage the Econet IPO, although we had appointments with other 2 clients. So it was quite a very interesting start for us, and everything went very well, and we managed to demonstrate why we had a distinct approach, and why we distinguished ourselves as a more efficient, dedicated, focused
provider. Before we go to the success of Econet, what lesson does this chapter of yours, where this client comes and says, let's go together, let's go in together, things don't work out, what lesson does that teach you? What lessons can you share with the young people getting into business? Do you regret anything that happened in that particular season before the Econet success story?
Not at all. I think the big lesson is, I think we need to give each other a chance. What is required in life, you can be passionate, you can have desires, aspirations and all that, but somebody needs to give you a chance and demonstrate to you that they believe you. But before that somebody gives you a chance, you also need to give yourself a chance. And most often we write ourselves off before we even go to tell our story. So the lesson there is that, do you believe in yourself? And are you prepared to give yourself a chance? And when you communicate to the next person that you want to give you the chance and you believe, you also would only be able to do it if they also give you a chance. So that's the big lesson I learned, to say it doesn't matter whether someone is super educated, super rich, has got huge capital, anybody, even an ordinary looking person from a rural area, if they get a chance, they might deliver. So I think with that, for me, whether or not what we expected as our first appointment happened or not, but the fact that there was somebody who was prepared to believe, and I was very young then, probably very inexperienced, but someone still thought, I think this guy can do it. And then, of course, turning to the clients again, the Econet story, the Colcom, the Seedcos, those are the first clients that we got. Again, especially Colcom was the first to say we are signing. They're asking you, how many clients do you have? Do you have? None. How long have you been doing this for? Nothing. And they still feel, okay, we'll try, we'll try. Here's the agreement. So that is rare, and which is what explains why quite a lot of potential sometimes is lost because we are not prepared to give each other a chance.
Of these businesses, I mean, COPSEV registrars, escrow systems, financial securities exchange, which one has given you the biggest challenge and the biggest reward?
I think all of them, and they are structured and designed differently to serve different purposes. Yeah. So COPSEV is more of a back office administrative business, where a client decides they want to get listed and they are selling shares. You don't go to that company to buy shares. They appoint a transfer secretary to do that. So we are the ones at the back end of that. And you have to have very strong systems. You have to have very strong processes and all that stuff. It's a very hard sell because how many clients get listed a year, for example. And
with the advent of technology, do you think that your business is a sustainable model going forward? Won't technology take over that area of business?
Yeah, so technology, but the thing with technology is that business itself has to adapt and be the solution provider in that technology era. So you are just basically automating the management of shareholders' affairs, and you are doing it in a smart way. And as an example, one of the things that the company does is to manage shareholders' annual meetings, for example. And COVID comes, so we had to innovate and come up with virtual meetings, which are specifically customized for shareholders. They register, they vote, they do in a very smart electronic way. So that's one way of keeping yourself relevant. So yes, the technology is there, but you have to own that narrative. Yeah. So that's COPSEV. So it has its own challenges and all that. But the exchange space, the commodities exchange and all that, so that demands a huge amount of change, grain trading, maize trading, and all that.
Zimbabwe Mercantile
Exchange, yes.
Which is a private-public partnership with the Zimbabwean government. Is that am I right? And talk to me about the thinking behind that. Was that your original program thinking, or the government came and suggested that to you? Talk to me how the birth of that idea.
Okay, so I'll kind of trace back again to COPSEV. So after COPSEV, we looked at technology and we said we needed to have to be self-sufficient when it came to technology. Came up with technology to support COPSEV, were successful. Then we looked around and said, around us, there must be other players and operators who also have the same challenge we had with technology. So we started building technology for other players within our ecosystem. It was successful. And the last one that was left was the actual exchange itself, the stock exchange technology. So we put that together, and in between I had gone to Kenya. So at the time when they were automating, so I could figure things out there. So put together this exchange technology. And we came back here and, went around to the regulator to say this is what we are able to do. And either we automate what is there or we create an alternative exchange, managed to get a license, implemented the technology. So that was just for an alternative trading platform for securities, and then looked at it and said the same technology can be enhanced now to start dealing with other markets. So the first one will be the commodities markets. Why don't we automate the commodities markets, make them more efficient, make them more accessible, make them more convenient? So put together our story, approached the government and said this is what we have in mind. Government had an interest in that as well.
What's the shareholding between you and the government? Is it a 50-50 or 51-49?
No. So for ZMX, before we went to government, we had to look for other private sector partners, and TSL Holdings came along because they are very strong in logistics, warehousing, infrastructure, and all that. They agreed to partners. Then we also needed a bank. We went around, CBZ Holdings agreed, and they became a partner. So as 3 private sector partners, we went to government now and said, we are ready. We just need you to approve that we set this up, and also change a few laws to allow for open market trading. So the government was also interested in being party to that. So we are 4 partners in there. Government has 20% in the venture.
Okay, fascinating. You've already spoken about, you've done quite interesting projects. Talk to me about your introduction to the East African market. You are in Kenya.
Yes.
What are you doing in Kenya?
So pretty much what we are doing here, everything that I've mentioned that we are doing here, we also do in Kenya, and some of the stuff in
and Rwanda. You do something in Rwanda too?
Yes.
Similar kind of business?
So it's yes, but elements of it.
Okay.
Yeah. Where we do everything that we do in Zim is in Kenya.
Okay.
In other countries, parts of that as they are relevant because they are smaller markets.
What I found interesting was Akiba.
Yes.
Is that how you pronounce it?
Akiba, yes.
Akiba,
Yes.
which is, am I right to call it the world's first mobile retail bond in Kenya?
Yes.
Talk to me about that and the inspiration behind that platform.
Yeah. So remember we talked about sea trade earlier.
Yeah.
And using the sea trade, we always had an idea to say this platform can be used to raise capital, both debt and equity, the primary market activities. So in our interactions in Kenya, the government of Kenya decided it would be a good idea to allow citizens to buy government bonds, even in very tiny denominations. So they set out to look for someone who could provide that platform. And when we got to hear that, we then threw our hat in the ring.
Was it a tender? How was the process done?
So what they did, they invited the securities exchange there, Nairobi Stock Exchange, and their depository to provide the solution. They in turn had to now find technology partners. So we just approached Nairobi Stock Exchange and said we have a platform. Of course, they were shopping all over the world for the platform.
And yours came up tops?
Ours came out tops largely because we had already developed it. And whereas,
so what you've done in Zimbabwe and then you enhance in Kenya, you get the market?
Yes. So then it was looked at and it was taken to government, and government said, yes, exactly, that's what we were looking for. And then it was rolled out. How big
was this bond? Do you remember?
It was relatively small. They were looking at raising $5 million US dollars only from the public. And the idea was to bring in the mass market into it. The registrations alone, we registered about 500,000 Kenyans onto the bond. So in terms of the value, it wasn't that big, but in terms of the impact, it was huge. Why? Because the public could buy bonds for denominations of as little as $30 on their phone and just buy, start getting interest, trade the bond and all that. So it was quite a fascinating.
I want to stop you there. You've done amazing things. You've done stuff in Nigeria, you've done stuff in Pakistan, and together with the United Nations Capital Development Fund. So I want us to go to that exciting space, but also ask you the question about African capital markets. How deep are they? How wide are they? And what can be done to deepen and widen African capital markets? So when we come back, we're going to go to that space. At home, don't go away. Join us as Collen helps us understand the depth and width of capital markets and the work that he's doing in Pakistan and together with the United Nations Capital Development Fund. So see you on the other side.
We need to, be cognizant of the reality of our economies in Africa.
Greetings. My name is Trevor Ncube, host of In Conversation with Trevor, Zimbabwe's most engaging conversational show. I go beyond the headlines and beyond the sensational. We've brought before your screens change makers from arts, business, and politics, and from the region. Please join our growing community of viewers. Subscribe, like, and share. Welcome back to our conversation with Collen Tapfumaneyi, the founder and CEO of the Escrow Group. Have you subscribed? If you haven't subscribed, you are missing out. We are sitting on 83.1 thousand subscribers on YouTube alone. and boasting of 10.3 million views. Join this group of amazing people by subscribing and click on the notification button so that you don't miss out on any of this stuff. Collen, before we took a break, we did indicate that you've done work throughout the world. And one piece of work that excites me that you've done is you've recently led the successful implementation of warehouse receipt system in Pakistan, of all the places in the world. What is this business all about?
So the warehouse receipt system is what anchors ZMX as well. So what it is for you to set up a commodity exchange that is that manages the risk and is effective. You need a mechanism in which commodities are stored in certified infrastructure. Once they are stored there, certified because that's where all the handling, professional handling is done, fumigation and all that stuff, and preservation of the commodity. By observing standards of the storage of the commodity and through the certified warehouses, it will then qualify according to the law for an instrument to be issued that is called a warehouse receipt, which becomes a financial instrument. That is the instrument that is then utilized or used when trading the commodity. Not only that, that is an instrument that you can utilize to access funding. So if you're a farmer, you are in Mutoko, and you have your commodities stored in a certified warehouse, you get an instrument. With that instrument, if you're not ready to sell, you can go and actually use it to access financing. And the automation is such that the instrument doesn't have to be physical. It is electronic and it is put in your phone. So you actually push a request and then you are...
Are we using blockchain technology at all?
Not yet.
Or are we still using SSD?
SSD, online and all that. It's not yet on blockchain. So that is the model that we put together when we came up with a case to set up a commodities exchange in Zimbabwe. As we were working on that, the Pakistanis then floated a tender looking for a provider of similar technology. And out of just testing ourselves, we just decided for the fun of it to participate in the tender. And because it was a worldwide tender, then one thing led to the other, and we won the deal and we implemented the platform.
How was it like winning the deal? Pakistan. How was it like? Talk to us about that. Excitement, fear, anxiety?
A bit of everything. Yeah. Excitement in the sense that we're reversing the trends. We get technology from Asia, from Pakistan. But in this case, you are saying to them, some of them probably had never heard of a country called Zimbabwe. So you are telling them, we can provide you with the technology. So the process was quite brutal. It was really, really rigorous and it was difficult. But I guess they just saw that in their light something that they really liked. And so it was very exciting. But at the same time, it was quite scary. This is a country of 200 million people. And when you come to the resilience of the system, the security expectations on the platform, because this is a place where everything and anything can happen because of the size of the country, it wasn't easy. So even if you have won it, you are still nervous that what if something goes wrong. So eventually when we managed to implement, which was not easy as well, because here is a client that was being very cautious of where the platform was coming from. And obviously they would go the extra mile in ensuring that no stone is left unturned, which was quite a brutal exercise. But in all that, the fact that we managed and we implemented, and it has been running for 4 years now, and no incident.
So it's still running now?
It's running.
What lessons have you learned from that? The anxiety, the fear, the brutality that you're talking about. Talk to me about 2 lessons that this journey has taught you. I mean, you are a Zimbabwean, 16 million people. You're now operating in a market, 200 million people. What has this taught you about you and what you're trying to do?
I think the need to be thorough, meticulous, and very, very diligent cannot be overemphasized. You cannot run away from that. So we thought we were thorough, we thought we had seen it all, but we learned a lot. So the big lesson is, no matter, whenever you think you have a product, you have done it, you have been there, there's always room for you to learn more. And every time you get a chance, there's always a lesson to be learned. And while it was a very difficult process to really go through, but what we liked the most was the way the product and the team, our team here, was their skills were sharpened in the process. Is something that we have immensely benefited from. So that's the lesson, to say keep an open mind and always leave room to learn.
How big is your team?
The entire group is about 85 people. Yeah.
Okay.
Yes.
And the other thing you have done is, in 2020, you led Escrow into a partnership with the United Nations Capital Development Fund, and you're trying to help in the listing of SMEs all across the world. Again, that's an interesting assignment there. Talk to me about that assignment.
Yeah, so we put together a platform, again, in terms of our quest for innovation and all that. We said we have tried to deal with the investor side. I mentioned about C-Trade, someone being able to buy shares from wherever they are and all that. And we like what we are seeing. But what about the other side? The listings.
Sorry, let me interrupt you. Yeah. Is C-Trade proprietary? It's yours?
Yes.
Okay.
Yes. Right. So we then said, if we have a solution for this small investor and they are able to buy Delta, Simbisa and all that, why don't we also look for putting together a solution for the small company as well, so that they can also be able to raise capital from the same small guy who is also looking at investing. Again, why don't we use technology for that purpose? Because just like I have explained on the investor side, the rigorous process of you moving from one office to the other, providing forms and all that, we also looked at it on the enterprises side to say, for a company to get listed, what would it need to do? And the process is quite rigorous. Yeah. For a company to go to a bank to get loans and all that, what is the process? So we then said there must be a way to automate that. So we came up with a platform that we call Gem Portal, where we said you can have a business of whatever size from whatever part of the country. If you go onto this platform, you can tell your story, from the comfort of your business in Chireds or wherever. And it does the job for you. It will be telling you how well you are doing against the set criteria that we have provided. And as you do that, it will tell you what chances you have of succeeding in getting funding based on the financiers who would have gone to say, we are opening this platform and we will actually screen and vet and get you quality clients that you can invest in. So we make capital meet enterprise. So that's what we set out to do. And we put together the platform and we went around. But our challenge was that to get a financier there were two challenges. To get a financier that would commit to financing those small businesses, it was not easy. And then secondly, we wanted to do it as an equity kind of structure. And again, while our entrepreneurs were keen to get financing, the issue of dilution was a challenge for them. So we had to come up with a compromise to then say, let's look at starting with a debt kind of structure, but who wants to take the risk? So as we went around interacting, we came across UNCDF and we presented our case to them, and they liked our idea. And they then offered us technical assistance and a little bit.
Is this an idea that's operational in Zimbabwe, or it's across the continent or the world?
It's operational in Zimbabwe. So on FinSec, it's active. It's online. So we have the pipeline being built and quite a bit of funding here and there. Then we implemented it in Zambia, now working with the UNCDF. And in Kenya, it's about to be rolled out in partnership with Nairobi Stock Exchange. So the UNCDF now gave us a target of 6 countries in which this needs to be active, and then we spread it throughout the world. We're on 3 now.
Well done, well done. The other thing, you've just been recently elected chairman of the committee of the SADC stock exchanges, and you are on the steering committee also of the African Common Market for Free Trade. What's been that like? I suppose the big question that I want to ask there is, with your experience on the continent, what's the health of our capital markets? And if the health bill is not that good, what is it that needs to be done for the capital markets to assume the role that they play elsewhere in the world?
Yeah, so we don't have a good story there. The capital markets are still largely underdeveloped. There's still a long way for us to go. Liquidity is a big challenge. The depth of the market, the inclusivity or exclusivity of them is a big issue. Literacy, yes, financial literacy. So there's still a long way to go. We do have pockets. So we have South Africa on its own, much more advanced, much more developed, quite vibrant, even though they are also having a few challenges now with lots of delistings and all that. You look further up, I think Egypt and all that, they also are a little bit better. And Kenya,
so the healthy ones would be South Africa,
Nigeria, Egypt, Kenya and Morocco. Yes.
Those will be the 5 active markets.
Yes.
In a continent of 53 or so countries, that's not a good scorecard.
Yeah, so we do have very, big strides are being made elsewhere.
Such as?
So starting with infrastructure, the automation of the capital markets and all that. And also progressive regulations, laws, and all that promote the development of the capital markets. So a lot of progress is being made. But the challenge now will be, firstly, of course, the literacy, and then the liquidity. We do have a challenge with the liquidity. But I think the fundamental issue, and this is just a personal view, is that I think the model for our capital markets is incorrect, because everybody is kind of obsessed with capital markets that serve your blue chips. And their measure of success is what big companies you have, big investors, global capital flowing, which is good. However, we need to, be cognizant of the reality of our economies in Africa. So where is the bulk of the economic activity taking place? And if your capital markets is not designed for that bulk of the economic activity,
you're missing out on the action.
Yes, it's divorced. So the argument that I always use is that design capital markets so that they are utilized where they are needed most. So I would rather...
SMEs?
Yes. SMEs employ 60 to 70% of the people, and the economic activity there is huge. And even when they're informal, the liquidity that circulates in there is huge. So the capital market must innovate and go and break whatever barriers, and you will not need to depend on foreign investment. For example, someone comes and waves Bitcoin. Our people, they don't have to read a lot. They just come in their thousands. Pyramid schemes, there is liquidity that comes into those things. Why? It is because they are addressing the things that capital markets are not addressing. Why don't we? I know it's very paradoxical. Why don't we learn from pyramid scheme guys? Why don't we learn from these guys and say, what is it that they are doing about convenience? What is it about access that we can put into capital markets so that the capital market is for the small company in small enterprise from Hauna?
You're an important player in this, and your view and your opinion matters. Are we making progress? Are the capital markets being developed where they are, which is where the people are, the SMEs and so forth, rather than the blue chips? The blue chips are important, yes, but they are a small aspect of the economy. Are you winning this argument? Are you winning the direction as far as policy making is concerned, unlocking the right doors and not keeping on knocking on doors that won't open?
On the surface, we are all talking the right things, but reality is different. We are paying general lip service. There are so many funds there about SME, development and all that, but I'm not 100% convinced that our ecosystems. So if you bring in a very brilliant SME onto the market and your infrastructure, everything is done. If you go and wave it in front of your traditional fund managers and pension funds, how much convincing do you require to do for them to come on board? So there's still a lot that needs to be done. So us, we are infrastructure providers. That's what I do. So the technology, the exchanges, that's just infrastructure. It then needs users now. That's where we need to get people to change their thinking, not only the beneficiaries, that is the SMEs, not only the small investors, but our anchor players, even governments themselves.
Big business.
Yes.
Big business.
To then say, do we mean what we say? If we do that, you'll find that the impact and the multiplier effect of just carving out a small percentage of what you are pushing into your blue chips to go into SMEs as a revolving fund that is on an exchange, the impact it does on society, on the economy and all that is enormous.
And also, Colin, I like your language and your focus, but there's one very important sector for me, which I'm passionate about, the startups. Startups are not SMEs. Are we thinking about bringing in the startups and providing them with enabling support, enabling instrument, enabling legislation for them to participate in the economy?
Again, the infrastructure we have put together has a provision for startups. It's there. And the most frustrating thing is that when you launch this platform and you invite the startups, they come through. But the other side takes a long time to respond. So I think that's what is missing now, that to embrace that from the capital side of things. However, we are doing something about it. We are then saying, let's mobilize the capital from you and me, from ordinary people who are prepared to take a risk so that we have this matter in our hands. So that's the program we are working on now. So we are now bringing in the aspect of mutual funds. So collective investment schemes is the way forward, we think, because there is liquidity. Yes, we say in our markets there is no liquidity, but in the economy there is liquidity.
There is liquidity if we know how to go there. Colin, you and I could be here for a long time. I love this conversation. I love what you're doing. You're doing amazing things. I mean, investments, first of all, let's start the other way around. Savings and investments are the lifeblood of any economy.
Absolutely.
And the infrastructure that you're building is helping do that. But I want people out there to understand who you are. Where were you born? Where were you born?
All right, I was born in Chinhoyi. Yeah. My parents both come from Zimbabwe. Okay. Yeah, so born in Chinhoyi, raised partly in Zimbabwe, partly or largely in Chitungwiza. That's where I was raised.
Which schools did you go to?
So I went to Chitungisa schools, Seke 4 primary school, otherwise called Dudzai, and I did my high school at Seke 1 high school. Yeah. So I went through that process, university, then...
Which university?
University of Zimbabwe, yes.
What did you study?
Economics. Yeah. Then got a job, and I started with what is called the Institute of Development Studies at the university. That was doing ideas.
I remember that ideas. Yes.
Yes.
That big play, man. We lost that. We lost all that stuff.
Yes.
Who's been the biggest influence in your life? Who's been the biggest influence? Is it parents? Is it? Do you have a role model?
So the way my upbringing, there was a very strong support structure. Both parents very passionate about education as the only way one could actually break out of poverty and all that. So my uncles, from both sides, a very big influence. But as I grew up, obviously within my ecosystem, we had quite a few key people that I looked up to.
Anyone that you want to mention out there, give them a shout out.
So there's one Stephen Pezaro. Stephen Pezaro was like my mentor. He's the one who encouraged me to get into business and set up CopServe and all that. Supported me all
Those
the way.
People are
yes,
isn't it?
Yeah.
Tell me, have you ever failed? And if you have, where and what did it do to you?
Many times. So I've learned that it's never all rosy. Lots of things have gone wrong. Tried a lot of products, as they say. Probably 10% of what you try is what succeeds. So
what failure humbled you that you can still recollect now? That could be a lesson to people out there. What failure humbled you?
Well,
as you're thinking, I always tell people, and they don't believe this, that for me, being fired was very humbling rather. And not so many people can boast about being fired, but I was fired. So I really love the stories of our failures, because I think from those stories comes humility and quite a lot of lessons.
Yeah.
Well, what can you share?
Well, I think in my 25-year journey, we have tried quite a lot of things. I tried to set up a business in South Africa just before I went to Kenya. So I was switching back and forth between Nairobi and Joburg. But Johannesburg is where I wanted to be, and things didn't work out.
So you lost some money?
Not really. So we're to set up a document management platform there, automation of documents and all that stuff. And we did, spend quite a bit of time there. Yes, we did lose money, but just a small amount. But the business didn't take off despite spending so much time. Probably because I was in two minds between Nairobi and Joburg. Joburg looked more attractive, closer to home and all that, so that's where we're leaning, but it didn't work out. So that was a very disappointing period, but of course the comfort was there was the fallback.
You had something to fall back on.
Yeah.
I'm not going to let you go before we discuss books, so we're going to tend to books. Of late, I've been prioritizing my sleeping, and I find that a lot of us do not take care of how much we sleep. That sleeping is actually not a luxury.
Yeah.
I read this book about 2-3 years ago, and it's a book that I recommend. It's by Matthew Walker, Why We Sleep. I was talking to young people the other day and saying, oh no, I can't sleep more than 3 hours. You're damaging yourself. You need to rest, and you need to sleep at least 7.5 hours a night for you to be effective. Remember, this is a marathon. This is not a race that we win overnight. So sleeping is a very important thing, and I urge people to sleep well. I know you are in technology. This is a book that I read, opened my eyes to AI. It's called The Coming Wave, AI, Power in the 21st Century's Greatest Dilemma. This is a must-read, particularly by policymakers and people in business, understanding what AI can do and what it cannot do. I know a lot of people are talking about Elon Musk. I finished this book a year ago. Elon Musk, by somebody that I admire quite a lot, Walter Isaacson. Walter Isaacson wrote the book on Steve Jobs. Again, another great book. This is a great book. You want to understand Elon Musk? This is a book that I recommend you read. What books, Collen, have you read that you'd want to recommend to our book-loving viewers out there? 3 books at least.
Okay, quite a lot. So I was when you were talking, I was wondering which ones I should
share.
I think the one closest to what I do, Extreme Ownership. Mm-hmm. Extreme Ownership by Wilinki. Mm-hmm. Very impactful book. It's anchored on the Navy SEALs.
All right.
And how they accomplish their mission by taking extreme ownership. Yes. And when you read it and you are leading teams, I mean, as you are reading it, you are applying. Yes. Look for extreme ownership. You know. So that has been the most impactful for me.
What other one?
Interestingly, Dreams from My Father.
Oh, right. By Obama.
Barack Obama.
Yeah.
I think it goes back to that issue I've mentioned about getting a chance. Mm-hmm. So I think, and I'll tell you a little story behind that, why I had to read that book. The first time, was it 2007, when the campaigns were, starting then. And then I read somewhere that there is a character by the name Obama who wants to be president. And, I had a good laugh with friends. And this guy, where is he coming from?
Crazy.
Yes. And then one thing led to the other. And then now you read what was in his mind, was in his head when the day came to say, I want to be the president of the United States of America. Very fascinating. Mm-hmm. Lots to learn from there. Mm-hmm.
I lent, gave a copy to somebody out there. They never returned my book. If you've got my copy, Dreams from My Father by Obama, please bring it back.
The last one, this I read. I had to read it because when I did literature at school. But since then, I've read it 2 or 3 times. Thomas Hardy, Mayor of Casterbridge.
Wow.
Have you read about it?
No, I haven't.
Interesting, 19th century setting. And basically that book captures the interplay in society. Ordinary people, power, politics,
sounds
business,
like a fascinating
business acumen, the rise and fall. The higher you rise, the harder you may fall, and the whole interplay in there. It was, the setting is in the UK, 19th century and all that, but you could lift what was going on
and
there.
put it where we are.
Exactly. Mm-hmm. And it tells you a lot about morality and all that. Fascinating book. I could go on and on.
You could.
But lastly, I think I've read probably everything that Wilbur Smith has written.
All right. Okay.
And I find his style and the message or the lessons coming out of that book quite fascinating. Have you read Wilbur Smith?
I did when I was still reading a bit of fiction.
Okay. Wilbur Smith is excellent.
Fantastic. Yeah. Collen, thank you so much. Love what you do. You're doing an amazing work. Like I said, I've just been reading about China and the importance and significance of savings. I mean, China is the world's leader when it comes to savings, but not so much investments because of the way the economy is structured and the incentives and so forth. So you're doing a fantastic thing, and we wish you all the best, particularly the work you're doing in SMEs and in improving financial literacy and expanding the place to tap investments from. So thank you so much.
Thank you. Thank you so much, Trevor.
Wish you the best. Allow me to turn now to our viewers, Collen, who are all over the world. 53% of our viewers are not in Zimbabwe. They are all over the world, and we are grateful for that. Thank you for your support. Remember, we are a weekly show. We are out every Monday, 7 a.m. Central African Time on YouTube, to ensure that you don't miss out and you join the throngs of people that watch us every Monday. Remember to subscribe, to like and share. Go to that button that says remind you when there's an episode coming up, so that you've got an alert and you don't miss out. We love the comments below this video. Let's get the conversations going, and we love your feedback. Until next time, cheers to you all.